hmm And we're live. Awesome. We are now broadcasting to the world. So, firstly, I'd like to welcome Jatixa to the call today, to our Business Insight. So, welcome to the call, Jatixa.
Thank you so much. Thanks, David.
It's a pleasure to have you here. Look, the topic for today is super interesting: strategic management accounting for small business. Not a super exciting topic for most people, but here's the reality: the numbers in business don't lie. And I think when it comes to running a business, most people are really good at what they do. And that's the reason
Yeah.
they actually survive in business, because statistically, 80% of businesses don't make it past 5 years. And the ones that do are generally because they're good at what they do. Um, the reason I asked you to come on the call today was very, very specific, because we're going through economic correction right now in the world. And it's putting a lot of strain on people who run businesses in terms of cash flow. So, being a management accountant who has gone from corporate to helping small businesses, I figured you're probably the best person to give us some guidance and advice. So, maybe if we start with a bit of who you are and I suppose what brings you into the world of strategic management accounting.
Sure. Thank you. So, after university, I worked in many global companies such as Disney and Bombardier, and they were both in the UK. But here in Australia, I worked for News Corp. So, I've gained a lot of experience working with these global companies and seeing how they work, seeing how they have the senior execs and the board members, and the types of questions that are raised and the types of strategies that they put into place to run a profitable business. And a couple of years ago, I realized that there's even ones that generate a fair bit of revenue don't really have that support. Someone of that financial nature that's in their business month on month, really giving them some guidance and some support on what to do to look more towards the future rather than that historical accounting procedure that we're also used to doing, that like at tax time, looking back on the last 12 months. Having
Yeah.
someone with a management accountant experience, it's more forward facing, trying to future proof your business rather than just reporting on what's already happened. um,
Yes.
so that's what I kind of bring to small business.
Okay. And obviously, you've been doing this for a little while. And as we move into this sort of challenging economy, Um, what's the direction that you're taking clients to? Like, what do they need to be focused on right now?
So there's some key things that you can do. I mean, I could talk for hours on the types of things that we could do, but there's some key things. Um, Budgeting is a big one. A lot of small businesses don't really budget that well.
Mm,
It's trying to actually implement, okay, what's my break even? What kind of revenue do I need to achieve to still be a profitable business? Understanding what their costs are. So, when you're doing a budgeting process, really understand what the the key costs in your business. So the things that,
mm,
regardless of whether you're making any money or not, what do I have to pay for? I have to pay for my staff, have to pay for my occupancy, my operation,
yep.
rent and all of that stuff. And then there's all the variable ones, the nice to haves, the subscriptions and
Mm,
the I guess things that don't really impact, like you could take them away and it wouldn't really impact the business. So understanding those costs is essential. And I don't mean just, again, at tax time figuring out how much the expenses are, but working out what you need to pay for. That will help you then know exactly how much cash is leaving your business and
yep.
how much cash is going to leave your business. Like knowing what's going to happen in the next couple of months, like making sure
Mm,
you've got enough cash in your bank, will allow you to plan a bit better. So understanding your costs, but
yep.
then understanding where your revenue is coming from. So if most of your revenue is coming from one particular area, but your team is not really focused on that, you're going to miss a lot of opportunities. So there's things that you can do to try and maximize that as well. There's so much gold in your data. So using your data, using your costs, you
Yep.
can then plan like what you need to focus on to really maximize your revenue. You understand your costs, and then you can work out what your profitability is. If there's
Hmm.
things that you've planned and they don't quite look right, having that future planning allows you, it gives you a bit of breathing space, I guess, to kind of really make some changes, steer the business in a different direction, focus in
Yeah.
different areas. Whereas when you kind of look at that on a more historical basis, you've kind of missed the boat a little bit, kind of missed
Mm.
that opportunity to make some changes.
Hmm.
Um, yeah, so budgeting is a big one,
You touched on
and
it. Just
obviously,
want to jump in there for a second. When you talk
sure,
about budgeting, you mentioned a couple of things in there, which was cash in and cash out,
yes,
which sort of leans into this idea of having a cash flow projection as well. Now, can you
yeah,
give me the
absolutely.
distinction? So, if we look at budgeting and cash flow projections, what is the difference?
So the budget, I guess, is similar to what a profit and loss statement, kind of what your budget will be based on. It'll be your revenue, your cost of sales, and then your expenses.
Mm.
Now, the difference between a budget and a cash flow is essentially the timing.
Okay.
So a budget will kind of say when the revenue is coming in and the cash is and the expenses, but that might not necessarily be exactly when the timing of your cash is coming in and out of the business. So let me give an
Gotcha.
example. So say if someone had bought a service from you or a product from you, and it stems over several months. So say if it's 6 months. Now you might recognize that as a revenue in your profit and loss today, but the cash hasn't actually come into your business. The cash is sitting as a receivable in your balance sheet.
Mm.
So it might look like you've made that revenue, but you've not actually got that cash physically in your hands. Whereas a cash flow statement will recognize that inflow when the money actually comes in. So you can then do a forecast to say, okay, so this sale
Mm.
made in June, that cash isn't going to come in until September. So I need to make sure I'm aware of that. So that timing thing is a big difference. And the same with expenses as well. Like it will be the
Hmm.
same thing, the timing.
Yeah.
Another bit that would affect the cash flow forecast is something like tax. Like you can keep money aside for tax, but it's not actually left your business until you pay your tax. So
Hmm.
again, when you're doing your cash flow forecast, you can say that you've got money aside for it, but it's not actually left your business, or vice versa.
Right.
Like when money's coming in. So for me, the biggest difference is timing.
Okay. So now we're moving towards the end of financial year, and for us, when we work with businesses, I suggest this is an optimal time to do the budget for next year. It generally does take about a month to do because there's so many different methodologies for creating next year's budget. And the
Yeah.
expense part is pretty clear. You look at the last 12 months expenses and then you challenge each one. We just touched on this before, and just say, do I really need that expense? Is that part of growth or is that sort of optional? So we can start to reduce costs. And for most people,
Yeah.
that's what they associate budgeting with. But I think in business, there's another part to the budget, which is prediction of sales or revenue.
Yes.
How do people predict the future?
Oh, how long is a piece of string? Oh my goodness.
Yeah.
So obviously you can go by trends. You can
Hmm.
look historically, look at the trends.
Yes.
A lot of businesses have seasonal sales, so you can predict sales based on
Hmm.
seasonality. Um, again, you can, if you've already got promotions in place, again, you can kind of predict your sales based on your promotional activity.
Yeah.
Um, and the rest, I guess, as you grow your business, I think a little bit of it is just intuition. Like you
Yeah.
just, this is the pattern of your sales.
Mm.
The other thing you can do to predict your sales, or guess forecast your sales, is by looking at your costs and almost doing a break even, saying, okay, so if my costs are gonna be
Mm.
$1 million by the first 6 months, how am I going to make sure that this is my sales to make sure I've still got a profitable business? So
Hmm.
doing that, I wouldn't do a budget in isolation where I'm only going to look at my costs and then I'm only going to look at my sales. It needs to be a flowing document where
Yeah.
um, use this, use the resources that you have to predict
Mm.
and plan for your sales, and
Yeah.
then your expenses, but then look at the profitability. Is what you're doing worth it? Like if you're only making 1% profit, then would you rather just invest your money in something than do all this hard work to have this business? So like
Yeah.
you can change that. So then if say your profitability isn't where you want it to be, go back and then go over your numbers. So for
Yeah.
example, if you are a manufacturing business, and your profitability isn't quite where it is, go back and say, well, what's changed? Like maybe the components that you're using, your raw materials, your like delivery fees have gone up so much, fuel's gone up so much, like all of those costs have changed. Have you reflected that in your pricing strategy to make sure that your revenue is still going to make you achieve that profitability level that you're expecting?
Yeah.
So doing the budget will allow you enough time to say, okay, so this has all changed. I now need to change my pricing to reflect what's going on
Interesting.
in real life.
Interesting, because I think like this touches in on really the core of today's conversation, which is the economy is changing quite dramatically. We've got inflation at an all-time high. We've got, as a result of that,
Yeah.
employees want more wages. And one of the biggest fears most people in business have is if I increase my price, how many clients will I lose? And, a good friend of mine used to tell me, in business, revenue is vanity, profit is sanity, and cash flow is king. And sometimes
Yeah.
if we don't look at the profitability, because what you've just described as budgeting is really looking at the whole picture, not just revenue,
Yeah.
not just expenses, but profitability. And then the second thing you touched on there, which is important to me, is how do I predict the future? And there's 2 or 3 different methods that we can use. One is that we photocopy the last 3 years and we extend the trend, which is very conservative because that's assuming nothing changes. The second
Yeah.
one is that we look at our break-even point and we look at our desired profit. And we say, how much do we actually want to make next year? And based on historical expenses, what does the revenue have to be? So now we set a target based on what we want, which is probably ideal for me. And then there's a third way, which is super interesting, which we haven't touched on, which is where we look at all our resources and say, what would happen if we use them to their maximum capacity? And a simple example that I remember, I worked with a hairdressing salon one time, and first question I often ask people when we start working with them is, what's your capacity? And her response to me was, we're at 90%. And I said, can you explain that? And she said, well, we have 4 hairdressers in the salon and they're pretty much booked out all the time. And the only reason we're at 90% is because of cancellations or no-shows. And I said, that's super interesting. How many seats do you have in the salon? And she said, we have 8. I said, what's wrong with the other 4? And she goes, nothing, I just can't find hairdressers. And I said, so reality is in terms of that asset, the salon, we're at 50% capacity or 45%, not 90%. And so when we looked at the budget, we said, well, if you actually went and found the hairdressers, you could double the business. Interesting, without increasing the cost of rent. And I think a lot of businesses are like this, right? Where what they say is we're doing the best we can with what we got, or we're flat out. And what they're not really looking at is what's the expected utilization of the assets that we're paying for. And what you've just touched on there is going through a budgeting exercise is questioning all of my expenses. Am I getting a return on that expense? Is it being used to its maximum capacity? And if it is, or if it could be, how would that show up in the P&L?
Yeah, 100%. And utilization, like that can sound really intimidating, an intimidating exercise to do, but it really isn't. Like, you can really make it quite simple to do. Like, your business holds so much data. Okay, there's data for everything. If you're not collecting data, start collecting data. But say, for example, if there was a certain process, like if you collected the data on how long that process took. So, for example, I used to work for News Corp, so we did the time it took from the paper to start going for it to leave the door, like the throughput. We used to capture that sort of data.
Yeah.
And if we took, on average, it took, I'm going to be really simple here, say it took 1 hour from start print to it leaving the door. That's our KPI almost, right? And the data was there for us to capture that. And then as we're doing more products. If one production run ended up taking 2 hours, it's just it's a way of being able to raise some questions and saying, well, what
Mm,
happened? What can we do
mm,
to get better? And how are we going to make sure that we've maximized this utilization on every single time? Like, we're not going to
yep.
be perfect all the time, but
Mm,
like what you said about utilization, just having a look at different areas in the business, say, well, what can I do to make this better? What can I do to maximize the use of this space? Like, say if you've got an extra room, could you be renting that out for, like, I don't know, for workshops or something, where you can get a second revenue stream coming in just because you've got this empty space and you can utilize it in a slightly different way to what your normal business is. So
mhm.
yeah, just when you're budgeting and you've got some gaps, it's a really nice way of, like, thinking outside the box, I guess, and making sure you are,
Yeah.
like you said, maximizing what you have.
Yeah, and I think like important point, and I suppose the thread of this whole conversation is stopping what you're doing and assessing what's happened in the last year, and then analyzing it and working out where there's low hanging fruit. Because I think for a lot of people, and you just described something we've been through, which is we have a fairly large office, and we used to be all face to face before COVID, and we have 6 meeting rooms, and we have workstations, and it was empty, and so we started renting the space out, and now we've got people in the office that don't work for us, paying rent, and we don't have to do anything,
Yeah,
right? And the
easy.
main thing it's done is it's just reduced the cost of our rent as an offset.
Yeah,
And for us, that's not our core business. And 3 years ago, it wouldn't be. It's not even in the business plan, right? It was literally just looking at our P&L and our accountant having conversations, saying, "You need to move to a smaller office." And I said, "I like our office. Why would I want to move?" And they said, "Well, it's unutilized. It's an asset that's not getting a return." So often people don't look at these things. They go, "Well, I don't want to bother with that. I'm too busy looking at the bigger picture." Now,
yeah,
makes sense in some situations, but often we're just talking about low hanging fruit. We're talking about easy wins for a business. Reviewing
yeah,
subscriptions you touched on before, literally just saying just check them and make sure they're still useful, because some of them are just legacy. On the higher side, we have employment costs, and currently employment costs aren't going down; they're going up. And I
yeah.
think sometimes it's not about do I cut my staff; it's the question of are they producing what I need? How am I monitoring their performance? So we can measure things like revenue versus wages. And so
That's right. Yeah,
so there's a lot to be said for sitting down and analysing the data. A lot of people
yeah.
don't do this because they get stuck in a couple of places. Either I'm too busy, or I don't understand it. What's your prescription? What do you suggest people do in this next financial year, based on the current economy, to make sure that these issues are mitigated or reduced?
Oh gosh. Yeah, pretty much what you just said. Like, really look at your numbers. Like, they're there for a reason. It's not
Mm,
just, okay, so the month end's closed, it's done. The accountant will deal with it, or the bookkeeper will deal with it. It's still
mm,
your business. Like, you still should be interested to see what's going on and see if there's any differences.
yeah.
And by being proactive, again, like I've said before, like, you're buying time to make change. You're
Mm-hmm.
buying time to make a difference, and plug any gaps. If money's leaking from somewhere, like you've mentioned, subscriptions. I'm not saying cut all costs out. I mean, a lot of accountants say strip all your costs out, but
Mm,
you still need to spend money to run a successful business. But, like, maybe look at the level of cover that you've got. Maybe
yeah.
you've got the highest subscription of, say, zero, but you don't need the highest subscription. Like, just having more interest, by looking at it, you just start to question things. Just be a bit more curious about things. Um, there's certain things that you can do when you're looking at your numbers. Don't just look at the P&L. Look at your cash flow as well. So we've been talking about cash flow today. There's little things that's not going to take you a lot of time
Mm,
to turn on to really improve your cash position. Like, for example, um, I was looking at someone's system the other day, and they hadn't really turned on the ability for clients to pay on their phone. Like, you
mm,
could attach some payment platforms so that people can pay straight away. Or sending out auto reminders. That they're just little things. Like the systems are there. Make sure you're using what they've got. But
Mm.
on a slightly different, like if it's not system generating, when you're talking about cash, um, like talk to your suppliers, talk to your clients, like find out what's going on with them. But when you're doing this on a month by month basis, you've got more time to have those conversations. So, if you're finding there's a bit of a squeeze with your cash when it comes to paying certain suppliers, pick up the phone and start talking to them. Say, oh, look,
Yeah.
I've got 7 day terms with you. How about changing it to 30 days and seeing if you can negotiate some better cash flow deals that benefit
Yeah.
your business? They're still going to be paid, but it's going to really help you make
Mm.
sure you've paid your staff.
Mm-hmm.
Um, Again, what I mentioned before about raw materials and the cost of producing what you're doing,
Mm.
pick up the phone and say, oh, I've noticed but that my component X has doubled in price in the last 6 months. What's going on? Is there any
Yeah.
way I can negotiate some sort of deal with you? But yeah, so having those conversations allows you to breathe a bit and start
Mm.
making some changes.
Mm.
So making sure that you're getting paid on time and you're paying your staff on time,
Yeah.
and you're creating a relationship with your
Mm.
stakeholders.
Mm-hmm. So really, look, let's think about how we summarize today's conversation. What would you consider the top three things that people should be doing to actually strategically manage their accounting in their business?
um, I would say look at your numbers. Like, be proactive about your numbers. Don't do it every 6 months or so. Once a month, once a quarter, have a look at your numbers, see what's going on in your business so that you've got the time and the capacity to make some changes.
Mm-hmm.
When you're doing those numbers, you can budget. Like, you don't have to wait till end of financial year to do a budget. You can do a budget anytime you want. But like, just have a bit more of a future focus. Even if you can plan 6 months ahead, that's
Yeah.
better than nothing. So I would say look at your numbers, try planning ahead of time as much as you can. And
Mm-hmm.
I would also say don't forget your cash.
Mm.
Don't forget your cash. There's so many changes happening. Make sure you know what's going on in your bank balance. The difference between what your P&L says and what your cash flow statement says is very different because it's based on time. So I would honestly schedule an hour a month, 1 hour a month, just to go over this whole process.
Yeah. Yeah. So making sure it's part of your monthly routine, and don't be scared of the
Yeah,
numbers. And if you don't understand, just reach out and get some help.
absolutely. There'll be heaps of people that will give you some guidance if you're not
Mm.
quite sure. And no one is expecting you to know everything. Like, finance is just one part of your business. You're obviously an expert in what you do. No one expects you to know it. So there's no silly questions. Just ask for help.
Yeah, yeah, fantastic. Jatixa, I'm very appreciative of your time today. It's a very interesting topic for some, and for other people, it's just numbers and it goes over their head. But the truth of the matter is, the numbers don't lie in business, and if people aren't using them to strategize what they're doing, they could be leaving lots of money on the table, or even worse, they could be trading in a very precarious scenario, and especially as the economy sort of contracts on us. So I think what you've advised today is really helpful. If people would like to reach out to you, I guess your name is highly peculiar. So if they Google that, I'm pretty sure there's not more than one Jatixa Raniga in Australia. There might be, but I don't know of anyone else.
Anyone.
um, so look, I'll try and put some links also into the chat after we finish our call today, but I really appreciate your input. It's been really valuable, and I hope some people got some good insight out of it. So thank you.
Fantastic. Thank you very much.